You're listening to The Whole Truth, a Resources Rising Stars podcast.
Welcome to this episode of The Whole Truth podcast. I'm Paul Armstrong. I've been talking to Matt Healy. He's the Executive Director and Chief Executive of Venari Minerals. Venari has a big lithium project in Nevada in the States. The key to this episode is the value of the company, market cap of $21 million. The question I put to Matt from the outset is the stock cheap, and if so, why? As we said in this discussion, every managing director thinks his stock's cheap, but Matt takes us through why he thinks he's got a compelling argument for why it is cheap and why there's plenty of upside here. The US has made it clear they want lithium. He has a big project. He says he's got tons, he's got grade, he's ticking all the boxes. He's off to the States to promote it to investors, and he also talks to us very briefly. He won't give too much away about discussions that he's having with potential equity investors at an asset level in Japan, Korea and other parts of Asia who obviously want to get their foot on lithium supplies. This could be a big opportunity for investors because the stock hasn't run, even though the lithium price has been strong in the past 6 months. Venari is one of those that's probably yet to really cash in on that. Have a listen to this and see if you think this is an opportunity to get in early. Matt, thanks for joining us today. Anyone looking at this stock would say it's pretty cheap. Now, there wouldn't be a managing director in the world who doesn't say their stock is cheap, so you're hardly going to be an exception there. She would say that, wouldn't she? But the reality is that at $21 million, I think a lot of people would say, hey, this does appear cheap. What's the catch? Do you think it's cheap?
Oh, look, absolutely, Paul. I think on many measures, Venari is very cheap. Okay, on contained lithium and resources is the classic. But the production potential for the project, our Red Mountain Lithium project in Nevada, which is one of the greatest mining jurisdictions in the world, all these tailwinds from the federal government in the US. I mean, I've run out of reasons, all right? But I understand a little bit. I mean, it's a different project. Like it's very different from the pegmatite style hard rock deposits we have here in WA, and so that makes it a little bit harder to understand.
So let's look at the components of the project, and perhaps that might help us to, explain why the market is looking at this, saying, well, we're going to value this at $21 million and not $100 million. The resource, you've got a substantial resource. You've just published an exploration target, which, okay, the market's not really going to give anyone much value for exploration target, but it does show there's plenty of upside here. You already have critical mass. Is that fair?
Look, I think so. We put out a 3 million tonne lithium carbonate equivalent resource about 2 weeks ago, and I mean that's a huge amount of lithium in the ground. I mean, lithium carbonate, like battery grade lithium carbonate, trades at $20,000 a tonne.
So what about grade? If you've got the contained metal, but what about grade? How do you think that compares?
The resource on whole is the 6th highest grade sedimentary lithium resource in the US. So on that metric alone, it's great. But the real kicker is the northern end of the project. We've got this spectacularly high grade zone, and at a higher cutoff, it's 47.9 million tonnes at just under 2,200 ppm lithium. Now, if that was a resource on its own, that'd be the 3rd highest grade lithium resource in the US.
So you're saying you've got tons, you've got grade, you've got contained metal. So how does your inventory compare to others?
Look, some of these deposits are absolutely enormous. Like the largest one, Thacker Pass, it's got over 60 million tonnes of contained LCE. Now, that's over 100 years mine life. Now, I don't need that, right? What we need is 20 very high grade years. I think we're close to that already, if not there already. I mean, we need to do the next steps, which is going to be infill drilling and all the rest of it, more metallurgy, technical studies, get some financials on the project.
But at 20 years life, you've got more than enough to be able to say this. You've ticked the inventory box, and as you're saying, grade is right up there with some of the best of them. So we can rule those two issues out. The market would then say, well, okay, you've got the inventory, but would it be economic? What sort of cash flows would you generate? Now, how do you substantiate that? The first question that comes into that then is metallurgy. Have you put it into the lie detector box and said, yes, it's all recoverable at good rates, good costs, etc.?
Well, I can tell you what we have done. So we've done some scoping level leachability, and we get up to 98% of the lithium leaching from the rocks. Okay, tick. We've also done beneficiation test work. We've done a few beneficiation tests, and that's an important part of this style of mineralisation. So, and it performs well, right? So we were able to upgrade 1,000 ppm lithium to 2,400 ppm lithium. We retained 85% of the lithium. We got rid of 65% of the rubbish, and probably reduced the acid consumption by almost half. Now, acid's the number one OPEX line item for these things, so that's a massive achievement. And it also means that if you can, take this many tonnes at, let's say, low or moderate grade and turn it into this many tonnes at high grade, then you're not going to be spending so much capital on that plant, on that leach plant, which is really going to create all the value. That's what's extracting the lithium.
So you'd say that the metallurgy box is ticked? For
the most part. I've still got some work going on. So I've got some lithium carbonate test work underway right now. I'm expecting those results to be out by the end of this month. So that's going to be looking at producing a technical grade lithium carbonate and then upgrading it to battery grade. That's what that test work does. It's the first test of this kind that we've done for the project.
So that then says, well, where's the schedule here? What's the time frame to a FID and ultimately to a production and cash flow?
Yeah, well, we've got a very busy year planned. Okay, so what I'd like to do is get back on the ground and do some more drilling. We're going to infill the higher grade parts of the resource. We're going to upgrade their resource category. Right, so at the moment everything's inferred. We want to upgrade to indicated, maybe some measured.
So conventionally, ordinarily that would be expected to, the confidence that comes with the upgraded resource would be expected to be reflected in your share price. No. If mining projects of history are anything to go by, so you're taking it from an inferred, as you say, to a measured indicated category. Mm-hmm. So there's one potential re-rate for the stock.
That's right.
Yeah, and then beyond that, some more metallurgy. Give the market the comfort that this thing will do what it's meant to do when it goes into the box.
Yep, absolutely. We've got more metallurgy in the pipeline, and then we're looking to finish up the year with a scoping study. So that's going to give us the first lot of financials for the project.
And then, so speaking of financials, how do we know what's going to come out of this when you produce it? Where's your economic studies?
Look, yeah, we're too early for those yet for this project, so we can't. You can't under JORC, you can't do a financial study on an inferred resource. So we have to do the upgrade first, right? So that means drilling. That means a lot of results are going to come in the pipeline. We'll do the resource update, and then we can progress with the scoping study. And then 2027. Assuming all goes well, which I expect it to, straight into PFS.
Right. Now let's look at the market, because obviously lithium is in big demand in the US. It's on the critical minerals list. Funnily enough, yes, there are some big deposits there, but you wouldn't say that the US is over-endowed with lithium in the context of things.
One of the interesting things about the US is these sedimentary style deposits, that is their deposit style. So they've got some pegmatites, they've got some hard rock deposits, but not much to speak of. They're low grade and low volume typically. They do have some brines. So the only producing operation in the US is a brine, and it's in Nevada actually. But there's some oil field brines as well, but they tend to be low volume. So really in the US, if you're looking for a serious lithium operation, you're going to look at these sedimentary deposits because they're large scale. They're going to be low mining cost, and they can generate lots of lithium over long mine lives.
Right. So once you get this inferred resource upgraded, really opens the door to saying, hey, we've really got a flyer here.
Look, absolutely. I'm pretty confident we've got a flyer already. If you look at the work that we've done, I can't say we've got that because we haven't done the work. Right? We're not at that scoping study level. But what I can say is if you compare it to some of the more advanced projects in the US, and if you bear with me for a second, the second most advanced project in the US is Rhyolite Ridge. That's Ioneer. It's an ASX listed company. They hold that project, right? They're going to produce 380,000 tonnes of lithium in the first 20 years of that operation. And their average reserve grade's about 1,460 ppm. Okay, so right, so there's a line in the sand, right? So that northern part of our resource, if I go back to our resource, so we had 560,000 tonnes in that at an average grade of just under 2,200 ppm. So it's early days. It's an inferred resource. We've got to do the infill. We're going to do more met, and we're going to do a scoping study. But it's difficult to think of a better foundation when you compare it to like a $1.5 billion MPV project in Rhyolite Ridge.
Right. And do you expect that you would get some help from the US government here in a funding sense?
Yeah, I think so. There's since the the Trump administration, about a year in now, one of the first few things that President Trump did in office was release a series of executive orders. They were around energy and critical minerals, right? So there was declaring an energy emergency, right? There was unleashing American energy. Now, both of those had a critical minerals component to them because lithium, of course, is tied to energy. And then the third one was immediate measures to increase US mineral production, right? This is, and what we've seen since then, those executive orders have all flown down the chain. So we now have shorter permitting timeframes for both exploration and actually production. We've got the Development Finance Corporation and the Export-Import Bank. They're making direct investments in critical minerals projects. We've seen this with MP Materials. The US, the government's taken a stake in Lithium Americas. There's plenty of opportunity there, and particularly once we get to the point where we can say, hey, this might be the third highest grade lithium project in the US, right? We get to that point. Well, the first two have got funding. So Thacker Pass and Rhyolite Ridge have Department of Energy loan funding. It's like the lowest cost finance in the West. So yeah, absolutely.
Right. So you would expect that, as you say, when you get to a certain point in it, in the state of the resource and the metallurgy, you'd be able to put your hand up for some big money to help cover the capex.
Yeah.
And obviously you would expect to sell this within America.
Yes. So
have you had any discussions on those fronts?
No. Look, the advice we've been given is that that the government won't talk to you until you've got a resource. Now, we're only 2 weeks out from that resource, and so those discussions are on the plan for this year. And I've got some people in the US looking at the best opportunities, so we can optimise those discussions.
Right. So come back to our original proposition then. Obviously, yes, it would have seemed to be cheap, and you've got a pipeline of activity. What are you doing now in terms of a marketing sense to get out there and tell people, hey, this is what we've got and this is what we're doing about it?
Look, I've been spending almost every day on the road since we put this resource out, Paul, and we're off to North America, we're off to PDAC to be promoting the project there, and then over to New York to be talking to potential investors.
Right. So you've got a busy roadshow schedule.
Yeah, look, absolutely. So this is just the next month, and then I'll be back down in Nevada. Talking to people there. Yeah, it's the opportunity now is to really put this project on the stage in the US.
Are you open to selling part of the project, equity directly in it at an asset level?
Yeah. Look, absolutely, and we'll explore those opportunities as well. Right. So I can't say too much about these at the moment, but we are exploring.
Are they on the agenda for when you go to the States?
The States are also looking at in parts of Asia, South Korea and Japan, and there's opportunities there. The lithium chemical producers,
some sort of vertical integration.
That's an example. Yeah, but I mean, there's a lot of interest coming out of South Korea and Japan for investing in critical minerals projects in the US. This is all off the back of the Trump tariffs.
Now, there's just been a deal overnight where the Japanese have agreed to invest vast sums in America. Now, it's early days, but perhaps that would be an avenue for Japan to deliver on their promises to Trump and say, hey, we can kill two birds with one stone here. We can do what we told Donald will do, which is invest in the States, and we can get our foot on some much needed lithium supply.
Yeah, 100%.
And Japanese parties are among those showing interest.
Yeah, and if you look at the record of the Japanese in Australia, they're not they're prepared to invest at a relatively early stage. So that looked good for something like someone like us. We've just put our first resource out.
Right. So that's the opportunity for people listening to this is to say, hey, at $21 million, you can get on board with the big boys at a price that would appear to be pretty ground level.
100%. This is a fantastic opportunity right now because I don't think it's going to last for long. Because when you do all those numbers that we've sort of outlined before, I mean, this is it's not even upside. We're almost there,
Yeah, great. Matt, thanks very much for taking us through that. Obviously, it's quite a fascinating scenario. I suspect that as you get on the road, the penny will probably drop over the next few weeks and months. So we'll watch that and come back to you. Thanks again.
Thanks, Paul.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.